Wednesday, September 6, 2023, Maneco64, home of alternative economics and contrarian views. Today, we're going to look at how gold is exposing the myth of deflation in Japan. Yes, in Japan. Before we do that, I wanted to look at a few things that I've seen that some of you have sent to me, and also some headlines which I think are fairly important. The first thing is about Neil McCoy Ward. He's a very popular YouTuber. He's got over 400,000 subscribers. Good on him for that. And he's recently moved to the Isle of Man, which is a tax haven, really. It is a British dependency. It's like a colony. It is sovereign, but the UK still runs its foreign policy. And he did a live stream, I think a day or so ago, and he was telling his viewers that Google, which is the parent company for YouTube, hasn't paid his revenue in 2 months, and they're arguing that he's in the Isle of Man and that they can't pay him. My feeling is that looking at his YouTube channel, he's still got his YouTube channel in the United Kingdom, and what Google is doing could be wrong. It's like they're trying to stop the payment to him because they think that he's trying to avoid tax. But if he's become a resident of the Isle of Man, I don't think that there's anything they can do. And even if he wasn't a resident and he wanted to get paid there, it's none of Google's business. And he also talks about some of his one of his banks closing his accounts, which is always bad, of course. So I thought that was interesting, and I hope he sorts things out. He might need a lawyer. And then I saw this article as well before someone sent me that Neil McCoy Ward live stream. And this was also from yesterday, and it says more than 1 in 8 UK bank branches to close in 2023. It's an FT story. I think this just goes to show that they're going for a cashless society. Of course, they don't put that in the FT. They make it seem like they're working hard to kind of help people. But if they really wanted to help people, and they would keep the branches open. And they talk about the fact that vulnerable people need branches, as if normal young people wouldn't need branches. So it's just another step to a cashless world, in my opinion. I'm going to put a link to this story in the description under archive.ph. The other thing I've noticed is that the oil price has been going up quite nicely. If you're long oil, it's not a nice thing, of course, for consumers, nor the markets, I think. And oil, Brent hit $90. OPEC, especially Saudi Arabia, has come out, and they're saying that their cut of 1 million barrels a day, they're going to extend it to the end of this year. And right now, it looks like the Biden administration is having to replenish the strategic petroleum reserves. And it's ironic because years ago, prior to 2020, the markets did like when oil went up. Bond prices went up, stocks went up, because it meant the economy was doing well. But now it's back to how it used to be 2 decades ago. It will lead to higher prices. It's not going to cause inflation, of course, and we're going to come to that right now about Japan. And of course, I have a very good subscriber from Japan, Rumpelstiltskin. He even sent me this. I think it was last year. It's a Newsweek magazine from 1971 that came out in Japan. It's called The New Dollar. That's when Nixon closed the gold window. So thank you again, Rumpelstiltskin. And all of you know that I've been covering Japan, and not just the JGB market, the yen carry trade and how important it is for the world, but also the price of gold in yen. And I've been saying that in Japan, you haven't had deflation. The only reason they say that Japan has deflation is because they have to keep inflating. So they concoct these negative CPI numbers, which don't mean a thing, because CPI is not inflation. As hopefully you all know by now, inflation is the creation of currency and credit out of thin air that leads to rising prices, but it might lead to lower prices as well. But what you need to remember, it's the increase in the supply of currency, and usually that dilutes the value of the currency. It's like adding water to the milk. It dilutes the milk, and that's what the Japanese have been doing. And the price of gold in Japanese yen, as you can see here, it's gone from just above 60,000 yen in 2009 to a present level of just around 284,000, which is an increase of 458%. What that shows me is that the Japanese yen has been debased. So there's no such thing really as deflation, because when you deflate the currency becomes worth more. So the Japanese yen, if there has been deflation, should be worth a lot more in terms of gold. And this chart should be going the other way. And I wanted to check the Japan Money Supply M3. And thankfully, Trading Economics keeps this data. And you can see here, since 2003, it's not been deflating. If anything, it's been inflating. So Japan has been inflating the currency. It's not surprising that the price of gold has been going up. And the reason I'm talking about this today is that we've got now the FT, who I would venture to say doesn't understand gold. After all, they wrote this editorial here back in 2004, which said, going gold, the pointlessness of holding bullion continues to sink in, right? I thought it was so outrageous at the time that I cut it from the paper and I laminated it for posterity. And of course, the FT is a UK publication, but it's actually owned by a Japanese company. And it just goes to show here, this article, I'm going to read it to you, that they don't really understand gold or inflation or deflation. It says, inflation worries fuel Japanese rush to buy gold. Well, the Japanese have been buying gold for over a decade, since 2004. That's why it's gone from 62,000 to 284,000. But let's continue anyway. Retail price hits record high above 10,000 yen per gram. So that would be around 310,000 yen. So the retail price is, there's a premium there from the 284 to 310. How did I work that out so quickly? Well, it's one number you need to learn if you're really into gold, real physical gold, not paper gold, is that 1 troy ounce is 31.103 grams. So when you see 10,000, it's you just multiply it by 31, you get 310,000. It's very easy. As household attitudes to risk shift after years of deflation. But we haven't had years of deflation. We've had years of inflation. And that's where the FT is wrong. But let's continue. The retail price of gold in Japan has jumped to an all-time high as the yen extends its historic slide against the US dollar, and cash-laden households rush to find a hedge against inflation. Buying of yen-denominated gold at the nation's largest dealer has driven the price of the yellow metal above 10,000 yen per gram level for the first time in recent days. It was trading at 10,100 on Tuesday, according to retail prices established by Tanaka Kikinzoku, one of Japan's largest gold retailers. The retail price of gold in Japan, the main reference price for the metal in the country, tracks global spot prices, which have been pushed up. And here's the rubbish reason they give: coronavirus pandemic, the war in Ukraine, and tensions between China and the US. Well, they haven't gone back far enough. It's been going up since 2004. It also reflects a sharp fall this year in the yen, yes, partly, which recently passed 146.5 against the dollar, a level that last year triggered verbal market intervention by Japanese authorities. I'm going to stop right here. I'll put this article, a link to it below in the description under archive.ph. So why am I having a go at the FT? Well, because they are giving you all the wrong reasons about why the price of gold has gone up against Japanese yen. Japan has not had deflation. They've had massive inflation of the currency, as you saw from Trading Economics. And that's why the yen continues to sink. And I'm going to put a link up in the cards to my... I have a playlist about all fiat currencies are sinking. And you understand what I mean. It's not just the yen that's going to sink. It's the dollar. It's the pound. It's all the major currencies. They're going to continue to sink versus real money, which is gold. And there is no deflation, people. In the fiat currency system, there's never deflation. Yes, they might bring down the money supply a little bit like they have now. But we're seeing that there's trouble already, and they're going to ramp it back up. In Japan, they've been ramping it up forever. And they call it deflation, only because they tinker with this price basket and call it deflation. So there you go. Rudy's getting a little restless. Rudy, be quiet, boy. We're going to check the markets now. So it's 10 past 8 a.m. London time. And just another thing, tomorrow is Thursday. We're going to do the Mike and Mary show on Thursday because on Friday, I'm going to have my right eye operated on early in the morning, and I'll probably have to rest the whole day. So that's why we're going to do it on Thursday. I will probably publish a video on Friday. If not, you have to wait till Saturday. Anyway, we've got spot gold at 1925.30. It's down $0.50, so virtually unchanged. High's been 28, low 24, pretty narrow range. Silver continues to be sold off, paper silver that is. We're down 13 cents, 23.40. That's right near the low, and the high's been 61. The Dow futures is down 45. NASDAQ 100 is down 55. S&P is down 10. To the currencies, the pound's down slightly at 125.57. The euro is up slightly at 107.27. The dollar is down 0.25% versus the yen, albeit it's still above 147. which is even higher than the 146.50 that the FT just mentioned. The dollar is up 0.1% versus the yuan at 731.14. Dollar is up 0.75% versus the ruble at around 97.50. The Aussie dollar is up slightly at 63.81. The dollar is up a tenth versus the Canadian dollar, 136.54. Kiwi dollar is unchanged, 58.84. And now to the commodities. WTI crude is down a third at 86.04. Brent is down a third as well at 89.60. Platinum is down $8, trading at 922, and high-grade copper is down 0.5% at 382. And the other thing that's happening here that doesn't bode well for financial assets is that bond yields are going back up. And even though the jobs data were seen, I mean, I saw it as dovish because it showed that economy is weakening. The bond market has gone down since then, and that's a bit worrying for the Fed, for the Treasury. The 10-year yield was around 4.09 right after the number, and we're now at 4.27. The key level to watch there for the 10-year yield is 4.33. Let's check the UK bond market, and that's been rising as well. The 2-year yield now is at 5.34. I think Jeremy Hunt should be concerned about that. And the 30 years fast approaching 5%. We're still at 4.86, but recently we got back down to like 4.60. So yeah, the bond market doesn't seem to be too happy about things. It seems to be telling the central banks that they don't really trust them 100%. So that's how I see it. And with that, I'm going to wish you all a very good day. Take care. Bye.